The stock market has claims on all kinds of companies that have gone public, and GameStop is one of them. It was in trouble because of, slow people going to malls and things like that. Some big institutional investors, hedge funds, were betting against it. And what that means is they were taking sort of a short, basically borrowing shares to sell them in the hope of buying them for cheaper price later. So hoping the price will go down. People online decided to kind of try to squeeze them, to force them to buy at a higher price and buy a lot of the stock. And they piled up to buy the stock to the point that the price went up, by 20 times. And they were not thinking about, what's the future prospect of it. They were specifically going after these hedge funds, these Wall Street people and all of that. This is a stock in a company. In principle, it's about what the company is doing and what the business is. Right now, for GameStop, it's just side bets on the companies. Also in option markets, the right to buy it or sell it or whatever, and insurance types of contracts on the sidelines, which don't affect the real company. It's just that if you have shares in it, like if you are a manager there or an employee there and you have shares, you're in great shape because all of a sudden, it's 20 times more. But where does it end? Well, nobody completely knows. Most people think, it will end and people will lick their wounds. And then the question is, what was it all really about ultimately? When we teach it in a finance course, we talk about, projecting future cash flows and figuring out the risk. And we had to do these exercises in the internet bubble. I was already teaching here. And it's like, okay, well, this company has no earnings. How do you project future cash flows? Maybe it'll start paying in 10 years and it'll grow really fast until then. Can we justify this price today? So we've been playing this game for ever, trying to figure out what the right value is of a stock. And then, of course, different people disagree, and then they trade, the pessimists, the optimists. It's supposed to ultimately give you a price discovery and allocation of capital, all the good stuff that capitalistic economy is supposed to do in all these markets where companies get funding. And it's not supposed to go through these kinds of gyrations and the crowd going after other investors, sort of a little sort of jostling on the sideline of this real economy. In principle, the stock market is a good part of the economy. It's supposed to allow us to save and to pass our savings into productive technologies and companies that are doing things that then, we buy as we like them and all of that. So the economy can really benefit from a well-functioning stock market that also kind of gives you a sense of where we're going and where the growth is likely and all this good stuff. In that market, I would not advocate, banning short selling or things like that. What is important is basic savvy. What's happening now really is madness because it is not tied to anything. So, it's a game played more casino style where some people will win and some people will lose, and you may hate somebody and try to get them, and all these other emotions that go into it are not really that productive. It is sort of unfortunate that we're here. It's not the way with these kinds of gyrations for these kinds of reasons that the stock market is supposed to be helping the economy. To the extent people talk about regulators doing stuff, and Elizabeth Warren was just saying, the regulators should do their job. It's not clear quite what job they should do. They should ban who exactly? It's freedom and it's capitalism and all this stuff. But, the Securities and Exchange Commission, the SEC, is supposed to protect small investors and make the markets efficient and capital allocation, all this good stuff you can read in their mission. And so one thing to do to protect investors, you say, I protect you from yourself, is certainly to prevent people from taking on too much debt in order to speculate like that. Try to make people reflect on what they're doing, the risk they're taking. So it's more about taking risk prudently. I certainly would not advise going in, for small investors, buying or selling right now and this dynamics. I certainly, I don't give investment advice in general, but especially in a situation so volatile as that, because, you might be lucky or not, but just like I would not really advise going into a casino. I stay, weighted out as a small index investor, sort of like me. And hope the market, does the right things in general, on average, overall stocks, and especially that the government is able to get the economy as a whole working better.